Right, let's do a quick video because I'm bored. Just to show you the timestamp on here, 7th of the 12th, they took this video down. It was me who said 20,000 on Bitcoin. I don't need to prove myself to little boys and girls. Jim Cramer. I'm sure you guys remember this video. He got over 400,000, 50,000 views in the end. Talked about FOMO and I talked about 20,000 and then down. I've got it on mute. There you go. 20,000, then and then down.
Okay, it might hover up.
Anyway, they've took that video down. So what I'm doing is looking at Bitcoin from a Wyckoff perspective. I mean, it's getting raped as we speak. Left shoulder, right head. Left shoulder, head, right shoulder. Yeah. So volume here is high here, and it's higher in the breakdown. All that's happened is gone into a complex pattern throughout most of January, and even as we speak, it's going down. But if I just bring this back up and we try to analyze this from a volume perspective, let's take off the EMAs have been taken off. Don't need RSI for this. Don't need this either. So just looking at it from a volume perspective, from a Wyckoff perspective, what we have here is likely we've had an initial buying climax with the high volume. You can see here, and that basically is like a stopping power for the price. I think that was accompanied by some negative news or bullish news. I forget what. I don't really care about the news. And then essentially that leads to a quick move down where people get out of their long positions, and you get this automatic rally which starts here, and the buying climax high and the automatic rally low, that determines the trading range moving forward, after which point you get this poor green volume going up into a UTAD. Now UTAD stands for up thrust after distribution. So what happens to the price? It goes above the trading range to try and test, is there any buyers here on the long side? Who else is doing business here on the long side? And as you can see here, the volume's quite poor because there's not a lot of buying up here, and then inevitably the price then rolls over. Following which we have two feeble attempts to retest the UTAD area here, as well as a little bit here and a little bit here. But as you can see, all of that is on really low green volume. So basically, it's trying to test the area of the UTAD, but it's just getting rejected every time. And this sort of trading range is the supply and demand. This is the professionals selling to the weak hands. As you can appreciate, these professionals buying hundreds and thousands worth of Bitcoin. So, sorry, BTC. So millions and millions in terms of dollar value. So they can't just distribute these shares over the space of a day or two. It takes a lot longer than that. And hopefully we'll be able to see some no demand candles here. Let me see if I can find you one. Yeah, that's a no demand. That's almost a no demand candle here. This candle at 20k, it's almost a no demand candle. And a no demand candle is a candle which has equal or less than the previous two bars in terms of the green volume, and it closes higher, and that is showing no demand for higher prices. Technically, it's not a 100% no demand candle because that volume is higher than this, but generally speaking, it needs to be either equal to or less than the volume of the previous two candles, and it closes higher. So this is a bit of a trap that they set in, and that gets confirmed not on the next candle but on the candle after. After which point you get these feeble attempts to go back into the UTAD range, breaking above the trading range of the buying climax high. You get this candle here. So this is once again a very negative candle here. It's gone up on quite high volume, but it's come back down again, so it's got rejected. Once again, that gets confirmed on the second candle after this on the 4-hourly chart. We get this another up thrust trying to push up a lot of green volume, but gets closed and then gets confirmed to the low side. And the problem with this Wyckoff, you don't really know at what phase you're in until you're well into the phase D or E, which is what we're in now. And right now we're getting ready for the markdown, which is probably going to happen as I'm doing this video. So once you sort of here, you don't really know. It could easily still be a movement going up, and then as the price gets more and more confirmed and it gets rejected at these previous buying climax trading range highs, you then get more of an impression as to what's going on. As you can see here, the red volume is now taking over. Lot of red volume here, which is the professionals selling out of their positions, and they're probably going short as well. So here we have Lupsies. So Lupsies are the last point of supply, and actually we've got a Lupsi here, we've got a Lupsi here, Lupsi here. So all of these are fucking Lupsies. They're just last point of supply where the professionals are going short and they're selling to the weak hands. So this was where I sent out the email. Once I saw this, I was like, wait a minute, something's not quite right here. It's going to break the trading range. It did do that. This is then the automatic bounce. This is the SOW. This is the sign of weakness. So if you follow me on Twitter, you know I've done a diagram on this, but this is the sign of weakness. So this was the sign that, wait a minute, something's not quite right here. There's been a clear change of character, and that's what Wyckoff speaks about in his books. So that's the sign of weakness there, and quite high volume. That's probably wave 3 of the Elliott wave pattern. And then it's gonna go back up, and now you've got another Lupsi here, which basically retests the trading range. It's trying desperately to get back into this trading range, but the composite man, the big bosses are pushing it down. So good luck if you're holding Bitcoin. And I've obviously done my but anyway, that's just quick analysis on Wyckoff. I'm gonna do a video on this in more detail on my Shopify store if you guys are interested. And as I said, if you want to sign up for the weekly thing, just let me know. So then you go back to the Wyckoff, you go back to the Elliott, and so your initial targets are here. So what you can do is shoulder, head and shoulder, take this distance, X, add it onto this distance. That's one way to project, and that gets you to about here. That's the A, that's the B, that's the C. This C is 1.618. You got a distance here and here. The way you do that is just by using this. Yeah, so that there, go like that. So you got a distance here, 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 here. I mean the lowest they can go mathematically is probably 4,000, but I can't see it going that low, to be honest. I can see it going to about 5,500. And you know, whether you analyze this on Elliott and volume, and even if you were to bring in RSI, it's not really too oversold yet. There's no divergence. I mean, as I said, it's going down, and obviously, you know, you got the CME futures on Friday. Statistically, Tuesday is the day that the big boys like to play around with the sheep and the fish. So but it's probably going to happen today as we speak. So yeah, it's a very good short if you guys are interested. If not, you better have balls of steel, because Bitcoin's about to test you. So if you guys want to learn trading the right way and not all this kaboom nonsense, then you better learn Wyckoff, you better learn Fibonacci, you better learn Elliott, and you better learn Wyckoff. So follow me on Twitter, and as I said, I will be uploading one to my Shopify. But yeah, there you go. And all of that is Silent C, Wyckoff. Learn the game properly and you won't lose money.